what is that true model? Share more about that with me. I think it's fabulous.
I'll just give you the deal I teach off of. Super simple deal. So I went out to Alabama. This is, call it 3 or 4 years ago. Went out to Alabama, bought a home, and it was listed, let's just say it'd be worth as it sits about 80 grand. I'm mailing direct to the seller. So I get a homeowner. I was able to buy that house for $50,000. Okay. It's worth 80. I sent the mail, I'm buying it for 50. I turned around, I cleaned it up a little bit. I only put a little bit of money into it, very little. I like to sell my seller financing deals with no repairs. So I put it back on the market at $99,000 and took a $10,000 down payment at 9.9%. And I financed it for 30 years. It's fixed mortgage. And the payment on that $774 per month, right? 30-year fixed, no different than your and my mortgage. I'm offering the same thing. It's just the rate's a little higher. Now, keep in mind, I was doing this deal when interest rates are 3.5. So selling a 9.9% interest rate to a borrower when rates are 3.5 is a little harder. Today, I tell someone 9.9, they're like, wow, that's super cheap. So that deal, I'm into it $40,000, and I'm going to collect $774 a month for 30 years. So people always ask, like on the debt side of things, number one, that payment, that $774, that's just principal and interest. So say with tax and insurance, we'll call it $900. That home would rent for $1,000. So the fundamental belief is that would you rather own a home for less than you can rent it for? Well, of course, everyone would rather own if it's cheaper. So imagine you go down the road 2 or 3 years and this borrower, if they fell on tough times and they go look and rents have increased and they're like, well, let's just move out. It's hard to make these payments, but the property across the street you want to rent is now $1,100 or $1,200. It actually costs you more to walk away from your home. Well, you're not going to do it. Plus you fixed it up. You're putting money into it. And so we're creating home ownership. We're adding value to other people. And the financial return to me, in that scenario I just gave you, it's about 20% annually I'm making on my money.
Brett, I want to take that one investment. You bought it for $50,000. You sold it for $99,000. You financed it for 30 years. It's $774 a month. And if I were to look at the entire payments over the course of 30 years, what is the total of that?
The total that I can do it real quick for you here. I'll do it. The total is 774 times 360, 278 grand.
Okay. So
it would be a total, but on an annualized basis though, literally year one, assuming they paid out the whole time, never prepaid, just paid 360 straight payments, the annual rate of return on my money is just shy of 20%.
Okay.
Keep in mind, I'm 0.9, but I charge them off the $90,000 loan amount, and I'm only into it 40. So it basically doubles my interest rate from the 9.9 to the, just a little shy of 20. Okay. And if they pay it off year one, right, as you know how the amortization schedules work. So year one, they got a $90,000 mortgage. At the end of year one, they owe $89,800. If they refinance year one, well, my return's 100%. I'm only into it for 40, and I get $89,000 back. And so debt financing is fascinating because even if the borrower doesn't perform 3 or 4 years down the road and the market does this, it doesn't matter to me.
Okay.
I can take it back
on a house like that.
$70,000 a second time. Yeah.
On an opportunity like that, Brett, is that one that I need to pay cash for? Like, if I'm going to be the bank, I probably don't want to have a loan on that property, I'm guessing. Is that accurate?
In an ideal scenario, what you would do, and there's lots of different ways to do this, but one way I go in there, but I do that deal. Okay. And now I've got a loan for $90,000, Brett's in it for 40. I could go to a bank and borrow against that note. I could pledge that collateral and go borrow against that if I wanted to, right? As another option, let's say I wanted to get my 40 grand back. I could go to you. I'm like, Brian, hey, you got a lot of money. You just sold your company, made a ton of money. I'm going to sell you payments. How many payments do you want? I'll sell you the next 5 years of my payments, the $774 a month. And I could do the calculator in a minute. And basically that'd probably raise my 40 grand back. I'm not going to get any payments for 5 years. You're going to get them every month. You're getting the 774. Mm-hmm. Your loan amount to me of 40 grand is paid back with whatever interest rate we agreed on. And I still own the remaining 300 payments on that deal. And I'm into it for zero. Right. And that's where people, like when we teach our events, people's heads start exploding. Cause I'm like, yeah, you need a little bit of money to do this, but there's so many ways to get at the money and get back at it. Yeah. And it's the financial modeling of the truly wealthy. The people I didn't know this stuff, right? Like I was like, oh, I had to do everything here, but I could go raise. I've sold partial payments. What I just described to you is called selling a partial. I'm selling you part of the payments to go raise money so I can go do more and more deals. And then at some point, the cash flow gets so significant, you're able to just, self-fund yourself and kind of do your own thing.
Look, if you're out there and you're a real estate agent and you're having success, but yet you don't feel like you're successful, you're making $500,000, $700,000 a year, and you're asking yourself, where does the money go? I don't remember the time. I'm trying to be at home. I'm trying to be with my kids. I'm trying to have a big career. And you just feel like you're missing something. I think it's because you are. And if you come to our one-day workshop, you can see the testimonials on our website. Go to bewealthypodcast.com. Come spend a day and let's show you a different way to play the real estate game that helps you hit your goals. Go to bewealthypodcast.com.